One thing I know about Bitcoin, I've been in a long, long time, is it trades like a wild animal. It's very hard to predict what it's going to do. and so, and that's
That's
why,
true.
and it's hard to hold it because of that, and because you get these big drops, these big rips. And look, if you miss the best days, I mean, Fred Krueger had a great book on that, Bitcoin 1 million. If you miss the best days, you're going to miss all of it. So you got to, I mean, there's really only one. If you believe in it, you understand what it is, you realize it's non-sovereign money that, we all hold. The only solution is really to just buy it, hodl it, and forget about it.
Lepard highlights a critical difference. Bitcoin's volatility makes it extremely difficult to manipulate in the same way as gold. Bitcoin can double or triple in price within months, and this creates a dangerous environment for anyone attempting to suppress its price through short selling or synthetic exposure. Here's the key mechanism. Investors create paper Bitcoin through derivatives. They attempt to bet against its price. But when Bitcoin surges unexpectedly, short sellers are forced to buy back at higher prices, triggering what's known as a short squeeze. This dynamic can cause rapid exponential price increases, where the very people betting against Bitcoin end up fueling its rise. According to Lepard, this is why Bitcoin behaves like a wild animal: unpredictable, fast-moving, and incredibly difficult to control.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
That's my take. I mean, it's unclear, but so a couple of things. One, they've had 50 years to build up the gold manipulation apparatus. I mean, even longer than that, because they started with the London Gold Pool in 1963. So, and there are cables from Kissinger and others talking about how they'd make gold volatile and nobody would ever ask for delivery. And I mean, there's a lot of evidence that gold was heavily, heavily manipulated. But one important difference between the two assets is that gold has never gone up 500% in 6 months. So, so if you're a manipulator and you're trying to hold the price of gold down, all right, fine, you can do it. The BIS can do it. Hedge funds on the Cayman Islands can do it. Large GSIB banks can do it. Whatever, and if the government wants you to do it, maybe they bail you out through the back door by giving you some free printed money. Whatever. I mean, a big year in gold is it goes up 20%. That's a big up year in gold. There've been some bigger ones, not many. Last year was bigger. The late 70s were a couple of years that were bigger. But generally speaking, gold's pretty stable in terms of its price movement. But as we all know, Bitcoin can double or triple quickly. And if you're short something that doubles or triples, you're wiped out. And so, my sense is that while people are applying leverage to Bitcoin and creating paper Bitcoin, derivatives and synthetic things around Bitcoin, they're going to get their head chopped off because when it moves against them, they're going to have to move so incredibly quick to cover that, the price will jump right through where they thought they had a stop loss. And that's actually the real point, because that exists. And it's what makes this asset so hard, is the volatility of it. That's really the only thing they can criticize it for these days, all is volatility. And over time, as it gets widely accepted, it won't even be volatile anymore. But that's, years and years down the road. The volatility of it, just, so let's assume there's a lot of people who are short Bitcoin right now, short paper Bitcoin. I think there are. I think some people use it as a short against being long the Mag 7. I know that trade was on for a while. When it changes, when the psychology changes and it really starts to move, and say it pokes through 80 and then 90 and then 110, and it's clear that, it's not just going to stop at 126. There are going to be a lot of people on the wrong side of this who are going to be forced to cover. And by the way, those are the people who are going to drive it. I said this in another podcast recently. It's not going from 120 from here to 126, or to 180. It's going to, 250 or 400. I mean, because all of the people who are on the wrong side of the boat are going to have to shift to the other side of the boat. And by the way, then it'll get to 200 or 300, and it'll, probably be overbought, and it'll back off again and come back down to 200 something. I mean, that's the nature of a new monetary asset being adopted. It's going to be a volatile affair. And Saylor points that out, and that's why he created Stretch, because a lot of the capital in the world doesn't want to play with some piece of equity that's that volatile, even though it's one of the highest performing pieces of equity in the world, if not the highest performing historically for 16 years. People just can't stand that volatility, and so that's why he stripped out the base layer of that and said, all right, buy it. You can effectively buy Bitcoin. You don't realize that's what you're doing, but you are. by buying Stretch, STRC, and you're getting 11.5%, annual real return. Oh, by the way, because it's return of capital, it's not tax, it's deferred tax. Your basis is going down. And so, the boomer class, a lot of people in my age group and some of my friends who have a lot of money and are thinking, how do I get a yield on my money? And, they're maybe getting 3 or 4%. Suddenly realize, I could get 11.5% in this thing. That's interesting. And so they come and they buy it, and that gives Saylor more capital, and he takes it and he buys the more volatile underlying, coins. And as long as the return on the coins exceeds 11.5%, his equity grows in value. It's a great model. And, he's going to push it until he's the richest guy in the world, which I think he will be, in 5 years or 10 years. So it's kind of an amazing story. And, I mean, it's exploding heads on, Wall Street and corporate finance and business schools. I mean, nobody, this is the biggest financial story of the last 100 years, and nobody's paying attention. I mean, you are, and I am, and Bitcoiners are, and some others are, but and he's getting a little time on CNBC and so forth. But I don't think people really deeply understand what he's doing. I mean, there's some guy on Twitter who, ex Bridgewater guy, he's still calling it all a Ponzi scheme. And I'm like, dude, you just don't get it. You don't understand at first principles what this thing is. So one thing I know about Bitcoin, I've been in a long, long time, is it trades like a wild animal. It's very hard to predict what it's going to do. and so, and that's
It's
why,
true.
and it's hard to hold it because of that, and because you get these big drops, these big rips. And look, if you miss the best days, I mean, Fred Krueger had a great book on that, Bitcoin 1 million. And if you miss the best days, you're going to miss all of it. So you got to, I mean, there's really only one. If you believe in it, you understand what it is, you realize it's non-sovereign money that, we all hold. The only solution is really to just buy it, hodl it, and forget about it. And then dollar cost average it or buy it on the dips. I mean, the one thing I will say, though, is the power law model, which Fred and Stasi and some other guys have kind of cooked up, does seem to be pretty good at giving a sense of when you're on the cheap side of the ledger and when you're on the expensive side of the ledger. Right now in the 70s, the median power law value, I think, is like 130, 140, that area, that range. And, the extreme would be like 200 or something or more, 250s. So at 70 something, it's fairly cheap, and at 200 something, it'd be more dear. So it's not a bad time to be buying it right now. The sentiment's been pretty shitty until very recent.
Another critical distinction between gold and Bitcoin lies in transparency. Gold reserves are difficult to audit, physically stored, potentially misreported. For example, U.S. gold holdings at places like Fort Knox have not been fully audited in decades, leading to ongoing speculation. Bitcoin, on the other hand, operates on a public blockchain. This means every transaction is verifiable, total supply is fixed and known, ownership is decentralized. This level of transparency gives Bitcoin a unique advantage in terms of trust and certainty.
Back to the gold Bitcoin conversation. I mean, that's the other thing. I mean, with gold, you can always bluff it, right? I mean, so we theoretically have 251 million ounces of gold, stored in Fort Knox and New York and Denver and all these West Point, all these vaults, and yet it hadn't been audited since the 50s. So, and my belief is that some piece of it, not all of it, but some piece of it's gone. Some piece of it, what I was told by some people who knew people now deceased that were in the Johnson Treasury administration, that this fellow knew some of those people, and he said that basically they told him that when the London gold pool was taking place between 63 and 68, Johnson made the mistake of sending some over there to support it, and he kind of raided Fort Knox. And so, I mean, and it's interesting too, right? I mean, Trump comes in, and one of the things they're talking about, we're going to audit Fort Knox, right? I mean, remember that? And suddenly it's gotten very quiet. My sense is he got read in that, nah, we really don't want to do that. That's not a good idea. And at least with Bitcoin, you know where it all is. You can see it. It's all on chain. It's there. You don't necessarily know whose address is what, but you know that it's all there, and that's the limit. And there's a certain certitude about the math of how many of these things there are. And with gold, you just never really know. Who's got it? Is it real? Where is it stored? Has it been audited? How do you move it? I mean, as Lynn points out, gold started getting demonetized when the telegraph came along. I mean, we all remember the stories of the Pony Express, and you watch Butch Cassidy, and they used to blow up the train that had the gold on it that was going to pay the payroll. And along comes the telegraph, and suddenly a bank in New York can send a bank in San Francisco a bunch of money, and they can do it just through a telegraph message. Debit this account, credit that account. So gold's been pretty clunky money and that was, in the 1860s. So gold's been pretty clunky money for a long time. That's what I see. Oh yeah, much better world. I mean, I think there's no doubt that the thesis of my book is that trend away from sound money to the point now where money is just incredibly unsound. And I would say it's an increasing trend that started, well, it started with the founding of the republic, but it got worse at every step. The founding of the Fed, the Roosevelt confiscation, the Nixon, taking us off the, exchange standard, et cetera. It's broken society. I mean, it's really, really broken society. There is no middle class anymore. The middle class is suffering. The wealth extremes are just outrageous. And it's time to fix that and to make the playing field level. And the only way to do that is to make the money sound again. We built a great world and a great economy on sound money, and we went off it. And in doing so, we're running the world into a ditch. And so the only way to go back to that is to go back onto sound money. And yeah, when we're on a sound money Bitcoin standard or Bitcoin gold standard or gold standard, and I imagine there'll be some kind of a hybrid of a couple. I think probably they'll try gold before Bitcoin. I mean, there's been talk about a monetary reset, although I'm not 100% sure. That they'll have the courage to really do that. I fear that what's going to happen is they're going to just let it keep running until we get to inflation, very high rates of inflation, bordering on hyperinflation, and then maybe they'll do a reset. Or maybe the currency will completely fail, and people will say, well, okay, that was no fun. Let's transact in real stuff again. And, the dollar won't spend and gold will spend and Bitcoin will spend. That's kind of where I think we're headed. And, when we get there, it's actually going to be really good. I mean, people think, well, that's going to be very painful getting there. And they're correct. I mean, currency failures aren't fun, but I've studied a lot of them, read about all of them or many of them. The one thing that is true is that when you go back to sound money, things get better very, very quickly. I mean, if you can avoid a war, or we're not doing that right now, but in general, if you can avoid a war and you return to a sound money system, everything organizes around the new form of money, and people go back to work, and you can repair shit. And now the people who were going through the hyperinflation, certain people got more badly hurt than others, and certainly older people suffer the most in hyperinflation because they don't have the earnings ability, the earnings power to recover whatever savings or pension they might have lost. The younger generations just, if they didn't have any savings to begin with, they just kind of pick up and they've got labor and off they go, and you know the world becomes normal again. And so we've seen this in a lot of countries. I mean, it happened in Ecuador, it happened in Weimar Germany, it's happened everywhere. I mean, so you can fix hyperinflation by going back to sound currency pretty quickly. But sadly, there aren't a lot of instances. There's some, but there aren't tons of instances of, oh, inflation got bad and we went back to sound currency. I mean, in many cases, it has to run the entire length. It's a total currency failure, and then you fix it. I mean, we got a couple of countries that are kind of in that mid stage right now, like Turkey is one of them, where they have haven't gone hyperinflation, but they have really high rates of inflation. Some of the South American countries went through that as well. And we could be in that condition. It's just that I think if we're in that condition, if I think if the U.S. gets to the point where we're running double-digit inflation regularly, my sense is the political outcry is just going to be enormous. That people are just and somebody is going to stand up and say, "I am a sound money politician. Elect me, and we will return to a form of sound money." And they're going to win overwhelmingly. And the reform will happen. I mean, that's my belief. It's a little bit of a hope, and I suppose someone would say, well, that's naive. That's not going to happen, but I'm not so sure. I mean, it could happen. It could not happen. We'll have to see, but I think it's a possibility, and that's what I hope happens. It will win that game as well. I mean, yeah, I have no doubt that over time it will become the medium of exchange. It's just so simple. It's simple. It's easy. There's no credit card processor. It's final. Yeah, it works, and it's private and non-sovereign. So across all metrics, it's superior money. And there's only one metric by which it's not, and that's just awareness and use. And that's because when you bring a new technology into the world, and you've got a lot of existing technologies that work pretty well. I mean, PayPal and Venmo and credit cards and cash. I mean, these things all work. Why do you need something different? And you have to kind of start to understand what it is and why it starts off as a superior store of value money. And that's to me, that longer term, that's the most important feature of money, that it be sound, that it not be, dilutable by, politicians. So you got to start there. But once you understand that, then the medium of exchange follows right in lockstep behind it.
Given Bitcoin's volatility, Lepard advocates a simple but powerful strategy. Buy Bitcoin. Hold it long term. Avoid trying to time the market. He references research showing that missing just a few of Bitcoin's best days can dramatically reduce overall returns. This reinforces the idea that discipline and long-term conviction are essential for Bitcoin investors.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.